Hi guys, welcome to this month's edition of the Zoopla Home Market Report. This is where we go through every single month in regards to the latest update in the property market, how well it's doing, the new supply of homes, and of course, more importantly, the prices. That's what really everyone's looking at, and the price is where it's going up the most. So look, we'd much appreciate it if you could sort of like this video, subscribe to this video, and then you can get real-time updates of everything that we're publishing online. So look, without further ado, let's jump in. So in regards to this month, so this Zoopla report takes us up to the end of April 2022. Now we can see that the house price is still increasing at great guns. We've still got an 8.4% year-on-year increase in the current UK house price growth. We've got the demand is up as well. We're still looking at 61% increase for demand for homes 4 weeks to the 22nd of May over the 5-year average. But importantly as well, you can see here that we've got a flow of new supply as well. We've got 7% increase in the flow of new supply. Now that has increased because we were seeing a trickle of supply coming through, but we're starting to see now a new 7% increase on a flow of new home supply. So as we come down to the executive summary, you see here we've got a house price exceeds 250,000 for the first time with annual growth of 8.4%. As we mentioned, the new supply coming to market is starting to rise up 7% compared with the 5-year average. We've got a slight softening of the market. We know that anyway. It's nothing new. We know that the market is going to not jump as much as it has been. There's no way we can have another 10% increase year on year. As I say, we're expecting between 4 to 5%. They're looking here about 3% in regards to Zoopla, but we think more like 4 to 5% increase year on year. And asking prices have been cut by 5% on more than 1 in 20 homes. Now, again, I'm not overly fussed about that. People might think that there's a dramatic drop on the way. The reality is you're talking about 5% of homes on Zoopla have been cut. But the main reason is they're overinflated in the first place. Typically, we've seen a price, if it goes for a price of 500, they've bumped it up to 530 to 550. They've just chanced their arm, and local estate agents have got business by literally chancing their arm and trying to extract as much as they can from a buyer. And of course, that's how estate agents get listings. They go and they promise the seller that they can get an extra 30, 40,000 incomparable to the next estate agent. So that's how they get your business. And then as we start to come in, you can see here the average time to sell is also starting to rise from record lows. We did have extreme lows where they were taking just a matter of weeks to sell, especially some of the stuff that we had on here. We put it on the market, we got it on Rightmove and Zoopla, and it sold within days. So we know that things aren't going to remain like that forever. So although it looks like the market's softening dramatically, it's actually not that dramatic in compare to where it typically is. It's just that we've had a bumper year to 18 months. Then as we start to head down, as I say, you can see here that the average house price exceeds 250,000. Now it rose by another £456 in April. The average value is £250,200. Again, another record high. We still feel those record highs are going to keep going right the way through this year, and we should start to see, as I say, them slowly creeping up to the point where we get to over the 260,000, 265,000 by the end of the year. But things are going that well in the property market that we only expect increases, even though they will be lower increases this year than we had last year. You've got here the quarterly rate of growth has slowed to 1.3% from 2%. Now that's only 0.7% down since the start of the year, so it's not dramatic. We're still in positive territory, but of course, as we mentioned, we are going to see that slow down. And in terms of the growth and where the growth is happening, you can see here it's not even across the country. So we've got Wales is leading the way, as you can see here. It's 11.6%. But we've also got, for example, Bournemouth has also ticked up. So Nottingham has replaced Liverpool at the top of the chart. And as we come down to the chart at the bottom, which I'll go through after this, we've got Nottingham followed by Liverpool, and then Bournemouth is coming in at third, and it drops Manchester down to fourth. So as we sort of head right the way down here, you can see we've got Nottingham at 10% year on year, Liverpool 9.9%, Bournemouth, Manchester, Leicester, Leeds. But you can see that 1% difference separates the top 8. So you go from Nottingham down to Bristol in 8th, it's only 1% difference in terms of the overall growth. So you can see there why the fact is pretty much as long as you're buying in the right area, you're going to make very little difference between where you actually get. And that's why when we have people that come in here and they look for something and they say, well, I want to get the best property, and we show them something and they think they can make 0.5% elsewhere, the reality is it's irrelevant. Typically, as long as you've got the right property in a good area, you're going to make money. We then go and have a look at the actual supply. Now for me, the fact of the matter is that supply is still restricted. We're seeing supply start to increase because of the reality is that people need, especially developers, they're noticing that there's an upward trend in property prices, so therefore they're noticing it's a great time to build, especially if you can get the materials in bulk and cheap, which they're still doing obviously, especially the big homes. They're going to have bumper profits this year, so in terms of shareholders, I've got no doubt they're going to have a great time in terms of the building companies, because there's a big disparity between what it's costing to build and what they're selling it for. So again, they're going to push as much supply as they can, and they're going to make hay while the sun shines. And as we said, in terms of the time it says to sell, it's lengthening. And you can see here several signs that the house market is starting to ease after a period of intense activity. And this will lead to a downward pressure on the percentages that we're actually achieving. I don't think it's going to lead to a downward pressure on prices, not at all. I think it would just mean that we don't make as much this year as we did last year, but we're still making money. But actually, in terms of the actual time it takes, we're not seeing much difference at all. In terms of a 3-bed house, you can see here that it's taken another couple of days to sell. 2-bed flat, another day. 3-bed house. Again, once we start to bring London into the equation, it's taken 3 extra days, and a 2-bed flat, because we've got London in the equation here, it's actually starting to sell a little bit quicker, because there are certain pockets to be had in London, but again, they are few and far between. And you can see here the average time to take to sell. It fell to very low levels earlier this year, but they were unprecedented. It's not as if we can keep that kind of that rate of return up. And again, asking price reductions. Let's take the UK as a whole. You've got here, 5.1% asking price reduction in terms of what was cut by 5% or more. And then when you put London in it as well, we're looking at similar prices if you exclude London to the rest of the UK. But the reality is that we're going to have these dips in prices or price reductions in terms of what they were on the market for, because the agents just overinflated them in the first place. So it wouldn't surprise me if we start to see more dips in terms of what you see on Rightmove and Zoopla, but that will still be an increase in the property price. And then, as we say, the outlook, we know it's softened. The reality is 8.4% is still great year on year, but we know that we've got an increase in interest rates and pushing up by the end of the year. We know we've got more and more people being affected by inflation, which means especially first-time buyers, they're not going to simply have the funds planned that they did have at the start of the year in comparison to what they have at the end of the year. But the benefit of that, and the reality is for every negative that someone has, there's always a positive that someone else has, is that we're looking to have more and more people rent. And in times of downturns or hardship, more people rent than buy. So the reality is people who have managed to buy an investment or a buy-to-let, they've got a bumper couple of years coming up, I've got no doubt about it. So all in all, not much change, as you can see here. We're still looking at the top 20 cities being pretty familiar in terms of the actual cities in question, but we've just had a bit of a change at the league table at the top. So overall, guys, still a great time to invest, still loads of opportunities out there, especially if you find the right pockets. And from me, have a lovely rest of the week and a good bank holiday, and I look forward to meeting you soon. Take care, bye-bye.